Global Monetary Watch, August 4th. Welcome back to another in-depth analysis of the latest developments surrounding the Iraqi dinar, the Vietnamese Dong, and the shifting conversations taking place across global currency markets. Today, we're looking closely at why these two currencies have once again gained major attention among researchers, financial communities, and international observers. While headlines and online discussions continue to create excitement, the real story requires a deeper examination of economic policies, central bank actions, and the long-term changes taking place within both countries. In this episode, we will separate the verified developments from the speculation and explore what is actually happening behind the scenes. Over the years, the Iraqi dinar and Vietnamese dong have remained two of the most discussed emerging market currencies. Their names frequently appear in online discussions, economic forums, and currency-related conversations. However, understanding these currencies requires looking beyond rumors and focusing on the economic structures that influence exchange rates. A currency's value is shaped by many elements, including national production, trade performance, inflation levels, foreign currency reserves, government policies, and confidence in financial institutions. These factors create the foundation for any meaningful discussion about a country's monetary future. In Iraq, much of the recent attention has been connected to the country's ongoing financial and banking reforms. The Central Bank of Iraq has continued efforts to strengthen the banking sector, improve compliance standards, and create a more transparent financial environment. These steps include initiatives related to anti-money laundering and counter-financing of terrorism requirements, commonly referred to as AML and CFT frameworks. These international standards are designed to improve financial security, reduce illegal financial activity, and help banking systems operate more effectively within the global financial network. These reforms represent a broader effort to modernize Iraq's financial infrastructure. A strong banking system is a critical part of any developing economy because it supports trade, investment, and economic activity. International financial institutions and global banks often evaluate countries based on their regulatory systems, transparency, and ability to meet international standards. For Iraq, strengthening these areas is an important part of improving its connection with the global financial system and creating a more stable economic environment. However, economic reform is rarely a quick process. Changes within a financial system usually happen through multiple stages, involving government institutions, banking organizations, and regulatory bodies. Progress often happens gradually through improved systems, better oversight, and stronger procedures. This is why analysts typically examine long-term trends rather than focusing on individual announcements or isolated events. The development of a country's financial system is a complex process that requires consistency and continued implementation. One of the major topics surrounding Iraq has been the relationship between the official exchange rate and the rate found in unofficial markets. For years, differences between these rates created challenges for Iraq's monetary system. Authorities have worked to address these issues by improving foreign currency procedures, increasing monitoring, and strengthening banking channels. A reduction in the gap between official and unofficial exchange rates can indicate improvements in financial organization and stronger confidence in monetary management. The exchange rate discussion, however, requires careful understanding. Currency values do not change simply because reforms are announced or because a country achieves certain economic milestones. Exchange rates reflect the overall condition of an economy, including productivity, exports, government finances, inflation control, and international reserves. These elements work together over time and influence how domestic and international markets view a currency. Iraq's economy remains closely connected to the global energy sector. Oil production continues to represent a major source of government revenue and foreign currency income. Because of this, global oil prices and energy market conditions have a direct impact on Iraq's economic planning. When oil markets are stable, governments often have greater financial flexibility. When energy markets face uncertainty, countries dependent on oil revenues may experience additional economic challenges. Beyond oil, Iraq has also been focusing on wider economic development goals. Banking modernization, Infrastructure projects, international trade relationships, and efforts to attract investment are all part of the country's broader economic strategy. These initiatives are designed to support long-term growth and reduce dependence on a single source of income. Building a stronger economy requires progress across multiple sectors, not only changes within monetary policy. The Iraqi dinar continues to attract attention because many people are interested in the country's economic transformation. Discussions often focus heavily on exchange rates, but the larger story involves institutional development, economic diversification, and financial modernization. Understanding these areas provides a more complete picture of Iraq's current position and the challenges it faces moving forward. Vietnam's situation presents a different economic journey. While the Vietnamese Dong is often mentioned alongside the Iraqi dinar, the two currencies come from very different economic environments. Vietnam has experienced decades of economic expansion driven by manufacturing growth, international trade, foreign investment, and integration into global supply chains. These developments have transformed Vietnam into an increasingly important participant in the global economy. Recent attention around Vietnam increased after the country reached another significant economic milestone with its classification as an upper-middle-income economy by the World Bank. This achievement reflects years of economic development, rising income levels, and continued expansion across multiple industries. Vietnam's progress demonstrates how consistent economic policies and international trade relationships can reshape a nation's economic position over time. However, economic growth does not automatically mean a currency will experience a major increase in value. Exchange rate policies are influenced by many considerations, including inflation management, export competitiveness, and central bank strategies. Vietnam has historically maintained careful management of the dong to support economic stability and protect its role as a major export economy. For an export-focused country, currency stability can be extremely important. A rapidly changing exchange rate can create uncertainty for manufacturers, exporters, and international companies operating within the country. Because of this, governments and central banks often balance multiple objectives when managing monetary policy. Economic growth, inflation control, and international competitiveness all play a role in these decisions. The comparison between Iraq and Vietnam has gained popularity because both countries are viewed as economies experiencing important changes. However, the reasons behind their development paths are very different. Iraq's economic story is strongly connected to energy resources, institutional reforms, and rebuilding financial systems. Vietnam's growth has been driven largely by manufacturing, exports, technology development, and global economic integration. This difference is one of the most important points to understand when examining these two currencies. Similar discussions do not necessarily mean similar outcomes. Every country has its own economic structure, challenges, and policy goals. The factors influencing one currency may not apply in the same way to another. Careful analysis requires looking at each nation individually rather than assuming they will follow identical paths. International organizations also play an important role in monitoring economic developments. Institutions such as the International Monetary Fund and World Bank regularly publish research and assessments about economic conditions around the world. These reports provide valuable information about reforms, economic performance, and policy direction. However, they are only one part of a larger picture and must be considered alongside other economic indicators. The renewed attention around the Iraqi dinar and Vietnamese dong highlights how closely people are watching global economic changes in 2026. Real developments are taking place in both countries, from financial reforms in Iraq to economic expansion in Vietnam. At the same time, understanding these developments requires separating confirmed information from assumptions and focusing on the facts behind the headlines. The most important lesson when following currency stories is that economic change is usually a process rather than a single event. Banking reforms, trade growth, institutional improvements, and policy adjustments develop over time. Each step contributes to the overall economic picture, but no single announcement tells the complete story. As we continue examining these developments, the focus remains on understanding the real factors shaping Iraq and Vietnam. The financial systems of both nations are evolving, but they are doing so through different economic paths. Looking at the facts, the policies, and the measurable progress provides a clearer understanding of where these countries stand today. As we continue examining the latest developments surrounding the Iraqi dinar and Vietnamese dong, it is important to look deeper into the economic factors that influence these currencies beyond the surface-level discussions. Currency markets are connected to national economic performance, government decisions, international relationships, and global financial conditions. While attention often focuses on exchange rates, the foundation behind any currency is built through years of economic policies, institutional improvements, and structural changes. For Iraq, one of the most important areas of focus has been strengthening its connection with the international financial system. Improving banking regulations, increasing transparency, and enhancing financial controls are all part of this process. A country's banking sector plays a major role in supporting economic growth because it provides the framework for businesses, investors, and individuals to participate in financial activity. Without a reliable banking system, economic development becomes more difficult and international cooperation faces additional challenges. The Central Bank of Iraq has continued working toward improving financial operations and increasing efficiency within the banking sector. These efforts include strengthening digital payment systems, improving oversight mechanisms, and creating better procedures for handling foreign currency transactions. Modern financial systems rely heavily on technology, accountability, and clear regulations. These improvements are part of a broader effort to create a financial environment that meets international expectations. Another important development connected to Iraq is the country's relationship with global financial institutions. Cooperation with international organizations can provide guidance, technical support, and assessments regarding economic policies. These relationships are often viewed as important indicators of a country's efforts to improve financial standards. However, international cooperation does not happen overnight. It develops through consistent implementation of reforms and long-term commitment from government institutions. Iraq's efforts to improve its financial system are also connected to the goal of expanding international trade. Countries participating more actively in global commerce need reliable banking channels, effective regulations, and systems that allow businesses to operate efficiently. For Iraq, improving these areas can help support broader economic goals, including attracting investment and creating new opportunities beyond traditional sectors. At the same time, Iraq continues to face economic challenges that require careful management. One of the biggest challenges remains the country's dependence on oil revenue. While oil has provided significant income and supported government spending, reliance on one major sector can create vulnerabilities. Changes in global energy markets, production levels, and international demand can influence government finances and economic planning. This is why economic diversification remains an important topic for Iraq. Expanding industries beyond oil could help create a more balanced economy and reduce exposure to external market changes. Areas such as agriculture, manufacturing, tourism, technology, and private sector development are often discussed as potential contributors to future economic growth. Building these sectors requires investment, planning, and continued reforms. The role of foreign investment is another important part of Iraq's economic development. International companies often consider factors such as political stability, legal protections, infrastructure quality, and financial transparency when deciding where to invest. Improvements in these areas can influence how global businesses view economic opportunities within a country. Meanwhile, Vietnam's economic progress provides a different example of development through industrial expansion and international trade. Over recent decades, Vietnam has become a major manufacturing center, attracting companies from around the world. Its participation in global supply chains has helped increase exports, create employment opportunities, and strengthen economic connections with international markets. Vietnam's growth has been supported by strategic economic policies focused on trade integration and industrial development. The country has built strong relationships with global businesses and has benefited from its position as a manufacturing hub in Asia. This transformation has helped Vietnam move from a lower-income economy toward a more advanced economic structure. However, Vietnam's economic success also involves careful management of challenges. The Vietnamese Dong's role in the economy reflects these priorities. Maintaining a stable currency environment can support businesses, encourage trade, and provide confidence for international partners. Exchange rate management is often a balancing process where authorities consider inflation, economic growth, exports, and broader financial conditions. When comparing Iraq and Vietnam, it becomes clear that both countries have different strengths and challenges. Iraq possesses significant natural resources and strategic importance in global energy markets. Vietnam has developed a strong manufacturing base and deep connections with international trade networks. These differences shape how each country approaches economic policy and financial development. Another factor influencing global currency discussions is investor sentiment. Markets are often affected by expectations, news coverage, and public perception. Sometimes, attention around a currency can increase because of economic developments, while at other times it can be driven mainly by speculation. Understanding the difference between these factors is essential when analyzing financial topics. Economic data provides a more reliable foundation for understanding changes. Reports on inflation, trade balances, foreign reserves, government budgets, and economic growth rates help create a clearer picture of a country's financial position. These indicators provide context that is often missing from simple discussions about currency movements. For Iraq, continued progress in financial reforms remains a key area to watch. Improvements in banking systems, international compliance, and economic management can contribute to stronger financial foundations over time. However, these developments represent a gradual process involving many institutions and economic factors. For Vietnam, continued growth will depend on maintaining competitiveness, managing inflation, supporting innovation, and adapting to changes in the global economy. International trade conditions, technology trends, and regional economic shifts will all influence Vietnam's future direction. The renewed attention around both currencies shows how closely people are watching global economic changes. Iraq and Vietnam represent two different examples of countries working to strengthen their economic positions. Their stories demonstrate that economic transformation involves many moving parts, from domestic reforms to international partnerships. As discussions continue, the most important focus remains on understanding the facts behind the headlines. Financial developments should be examined through evidence, official information, and broader economic trends. This approach provides a clearer view of what is happening and helps separate meaningful developments from exaggerated interpretations. The global economy is constantly changing, and countries are continuously adapting to new challenges and opportunities. Iraq's financial reforms and Vietnam's economic expansion are examples of these ongoing changes. Both nations are following their own paths, shaped by their unique economic structures, policies, and long-term objectives. As we continue this analysis, the focus now shifts toward the broader global environment influencing both Iraq and Vietnam. Currency discussions do not happen in isolation. Every national economy is connected to international trade, commodity markets, geopolitical conditions, and changes in global financial systems. To understand the developments surrounding the Iraqi dinar and Vietnamese dong, it is important to examine the larger forces that influence economic decisions around the world. One of the biggest factors connected to Iraq's financial position remains the global energy market. As one of the world's significant oil producers, Iraq's economy continues to be closely linked to oil revenues. The price of oil, global demand, production decisions, and international energy trends all affect government income and economic planning. When energy markets experience major changes, countries that depend heavily on oil exports often need to adjust their financial strategies. Oil revenue provides Iraq with important resources for government operations, infrastructure development, and economic programs. However, dependence on oil also creates challenges because energy markets can be unpredictable. Global events, changes in consumption patterns, and shifts in energy policies can influence oil prices. This is why many resource-based economies continue working toward diversification and stronger non-oil sectors. For Iraq, developing a broader economic foundation remains a major long-term objective. A more diversified economy can provide additional sources of growth and reduce reliance on one industry. Expanding private sector activity, Improving investment conditions and supporting different areas of production are all part of creating a more balanced economic structure. The modernization of Iraq's banking sector is another important area connected to this broader economic transformation. A stronger banking system can support businesses, improve financial access, and create more efficient economic activity. Digital banking services, improved payment systems, and better regulatory frameworks are examples of changes that can contribute to financial modernization. At the same time, financial reforms require cooperation between multiple institutions. Central banks, government agencies, commercial banks, and international partners all play different roles in creating a stronger financial environment. Sustainable improvement depends on coordination, consistency, and effective implementation of policies over time. International relationships also influence economic development. Iraq's cooperation with global financial organizations and other countries reflects its efforts to increase economic connections and improve financial standards. Trade agreements, investment partnerships, and diplomatic relationships can all contribute to economic opportunities when supported by strong domestic systems. However, international engagement alone does not determine economic outcomes. A country's internal conditions remain extremely important. Factors such as governance, infrastructure, business regulations, and workforce development all influence how effectively an economy can grow and attract participation from global markets. Vietnam provides an interesting comparison because its economic growth has followed a different model. Instead of relying heavily on natural resources, Vietnam's expansion has been strongly connected to manufacturing, exports, and foreign investment. The country has become an important part of global supply chains, producing goods for markets around the world. This manufacturing-driven growth has helped Vietnam strengthen its economic position internationally. Companies looking for efficient production locations have increasingly considered Vietnam because of its workforce, trade connections, and industrial development. These trends have contributed to rising economic activity and greater integration with the global economy. However, Vietnam also faces the challenge of maintaining growth while managing economic stability. As economies expand, governments must balance development goals with issues such as inflation, financial risks, infrastructure demands, and changing global conditions. Sustainable growth requires continuous adaptation and careful policy decisions. The Vietnamese Dong's management reflects these priorities. Exchange rate policies are often designed to support economic stability while allowing the economy to remain competitive internationally. Because exports are a major part of Vietnam's economy, currency stability can be an important consideration for businesses involved in international trade. This highlights one of the key differences between Iraq and Vietnam. Iraq's economic discussions often center around energy resources, financial reforms, and institutional development. Vietnam's discussions are more closely connected to industrial growth, exports, and global manufacturing networks. While both countries have experienced economic progress, their economic foundations are not the same. Another important factor in currency analysis is understanding the role of market expectations. Financial markets often react not only to current conditions, but also to future possibilities. Expectations can influence discussions, but expectations alone do not determine economic results. Real changes usually require measurable developments in economic fundamentals. This is why official reports, economic data, and policy announcements are important sources of information. They provide evidence that can help observers understand whether changes are occurring and what direction economies may be taking. Reliable analysis depends on examining multiple sources rather than relying on a single statement or online discussion. The attention surrounding Iraqi dinar and Vietnamese dong discussions also demonstrates how powerful narratives can become in financial conversations. When a currency becomes a popular topic, information can spread quickly through social media and online communities. However, popularity does not always equal accuracy. Careful evaluation remains essential. For Iraq, the continuation of banking reforms, economic improvements, and international cooperation will remain important areas to monitor. The effectiveness of these efforts will depend on implementation, consistency, and the ability to address existing economic challenges. For Vietnam, Future economic performance will likely depend on maintaining its role in global trade while continuing to improve productivity and innovation. As international competition changes, countries must continue adapting to new technologies, consumer demands, and economic trends. The broader lesson from both countries is that economic development is a long-term process. Strong institutions, productive industries, responsible policies, and international cooperation all contribute to economic progress. Major economic changes are usually the result of many smaller developments working together over time. As we look ahead, the discussion around these currencies will likely continue evolving. New economic reports, policy decisions, and global market conditions will provide additional information. Following these developments requires attention to facts, context, and the broader economic picture. The Iraqi dinar and Vietnamese dong represent two different economic stories unfolding at the same time. One is focused on rebuilding and modernization, while the other reflects decades of industrial transformation. Understanding these differences is essential when examining why these currencies attract global attention. In the final section, we will bring together the major points from this analysis and examine the key lessons surrounding economic reforms, currency discussions, and the importance of separating verified developments from speculation. As we reach the final part of today's analysis, it is important to bring together the major developments shaping the discussions around the Iraqi dinar and Vietnamese dong. Both currencies have attracted significant attention, but understanding their stories requires looking beyond headlines and focusing on the economic realities behind them. Iraq and Vietnam are both experiencing important changes, but their economic situations, challenges, and policy approaches remain very different. For Iraq, the continued focus remains on financial reform, banking modernization, and efforts to strengthen economic systems. Improvements in regulatory standards, transparency, and international banking cooperation represent meaningful developments within the country's financial landscape. These changes show an ongoing effort to create a stronger foundation for future economic activity. However, financial transformation is a process that involves many stages, institutions, and decisions working together over time. The development of a stronger financial system requires more than announcements or individual reforms. It depends on implementation, consistency, and the ability of institutions to maintain progress. Banking improvements, better financial controls, and increased transparency can support economic confidence, but they are part of a larger process that involves the entire economic structure of the country. Iraq's economic future is also connected to its ability to manage its dependence on oil while developing additional sectors. Energy resources remain a major advantage, but long-term economic strength often depends on creating multiple sources of growth. Expanding industries, encouraging private sector activity, improving infrastructure, and supporting innovation are all important elements of economic development. The global energy environment will continue to play an important role in Iraq's economic planning. Oil markets are influenced by many factors, including global demand, production decisions, geopolitical developments, and changes in energy technology. These factors can create both opportunities and challenges for oil-producing nations. Vietnam's economic journey provides another example of how a country can transform through long-term development strategies. The country's rise as a manufacturing and export center demonstrates the impact of industrial growth, international partnerships, and economic planning. Vietnam's integration into global supply chains has become one of the defining features of its modern economy. However, Vietnam's success also depends on maintaining balance. Continued growth requires investment in technology, infrastructure, education, and productivity. Like all economies, Vietnam must adapt to changing global conditions and manage challenges that come with expansion. The Vietnamese Dong's position within this economic framework reflects the priorities of maintaining stability and supporting economic competitiveness. Exchange rate management is influenced by many considerations, including trade performance, inflation conditions, and broader financial objectives. Understanding these factors provides a clearer picture of why currencies are managed in specific ways. When comparing Iraq and Vietnam, the most important point is recognizing that they are following separate economic paths. Iraq's development story is shaped by natural resources, financial reform, and institutional strengthening. Vietnam's story is shaped by manufacturing growth, exports, and global economic integration. Both paths have unique opportunities and challenges. The renewed attention surrounding these currencies also highlights the importance of responsible information analysis. In today's digital environment, financial topics can spread quickly and discussions can become highly emotional. This makes it more important than ever to examine official information, economic data, and verified developments before reaching conclusions. A major part of understanding currency markets is recognizing that economic changes rarely happen because of one single event. They are usually the result of many factors developing together. Government policies, economic performance, international relationships, and market conditions all contribute to the overall picture. For observers following Iraq, important areas to watch include continued banking improvements, economic diversification efforts, international cooperation, and fiscal management. These factors provide insight into the country's broader economic direction. For those following Vietnam, key areas include export performance, industrial development, investment trends, productivity improvements, and monetary policy decisions. These elements help explain how Vietnam continues to position itself within the global economy. The broader global financial environment will also remain a major influence. Changes in interest rates, trade relationships, commodity markets, and international investment patterns can affect economies around the world. No country operates completely separately from these global forces. The attention given to the Iraqi dinar and Vietnamese dong reflects a wider interest in emerging economies and their potential role in future global markets. As countries develop, improve institutions, and expand economic connections, they naturally attract more attention from international observers. However, understanding economic progress requires patience and perspective. Real economic change is usually measured through long-term improvements rather than short-term discussions. Strong economies are built through productivity, stability, effective institutions, and sustainable policies. The key takeaway from today's discussion is that both Iraq and Vietnam are experiencing important economic developments, but those developments must be viewed within the proper context. Iraq's reforms and Vietnam's economic achievements are significant topics, but understanding them requires careful analysis and attention to facts. The conversation around these currencies will continue as new information becomes available. Economic reports, policy decisions, and global market changes will continue shaping the discussion. Staying informed means looking at the complete picture rather than focusing only on individual headlines. At Global Monetary Watch, the goal is to examine these developments through a balanced and factual perspective. The global economy is constantly changing, and understanding those changes requires looking beyond simple narratives and exploring the real factors influencing countries and currencies. Thank you for joining us for today's analysis. If you found this information valuable, make sure to stay connected with Global Monetary Watch for future updates and discussions covering important global financial developments. Remember to stay informed, follow verified information, and continue learning about the forces shaping the world economy. Subscribe to my channel and press the bell icon.